Hey, this is Travis. In the last video, we talked about some more abstract properties and dynamics around Web3 tokens. And now in this video, I want to make things a little bit more concrete and talk about some specific token categories and some specific Web3 token use cases. Let's get into it. Okay, we are going to talk about two main token categories in this video, security tokens and utility tokens. Now let's start with the more interesting one, which is utility tokens, and these are the vast majority of the Web3 tokens out there. I'm sure you've heard that there are tens of thousands of cryptocurrencies out there, and most of them will claim that they are utility tokens. So a really good example of a utility token is what we talked about before and many times in this series. It is the native token of a crypto network. So let's take the Ethereum crypto network has the native token Ether, and in order to use this network, in order to use decentralized applications on it, users have to pay an Ether network fee to access those applications. So this is the utility that this Ether token provides. You redeem your Ether token, you're essentially paying for the computational bandwidth of Ethereum nodes to process your transactions, and this is what the Ether token gives you. So Ethereum is it's a general purpose smart contract blockchain. Many different kinds of dApps can launch on it that we're seeing right now. There are more specialized crypto networks that have more specialized use cases. So an example is SIA and Golem network. And so SIA is decentralized cloud storage, and Golem is decentralized cloud compute. And each of these networks have their own token. There's SIA coin and Golem network token, GNT. And so users can redeem these tokens in order to use these decentralized services. If I want to not use AWS or Google Drive anymore, which are central cloud storage platforms, then I can buy SIA coin and I can host my files in a decentralized way by paying SIA coin to SIA operators. The other major token category are security tokens. Securities are part of the traditional finance world. So a security, just before blockchain even happened, a security is like a stock, bond, or some other debt offering. A company is offering this to the public or maybe in a private sale, and they're trying to generate some short-term cash, and the investors of a security are hoping for a return on their investment over a period of time. The other major token category are security tokens. Security tokens are just tokens that represent real-world securities. And maybe we should take a step back and talk about what securities are. So securities have existed for a very long period of time, and they really exist in the traditional finance world right now. Securities are things like stocks and bonds, and companies and organizations offer these. They sell these securities to raise capital for some funding that they want to do. And the people who invest in these securities are expecting some return over a period of time. Now, these securities are regulated by something called the SEC, the Securities Exchange Commission in the US. And they want to do this. The mandate of the SEC, I looked on their website, is to promote efficient securities markets and then to protect investors from securities fraud. So yeah, these security tokens just represent real-world securities, and we already have examples of companies issuing stock as a security token on the Ethereum blockchain, and also bonds. I think EIB, which is a European investment bank, launched a bond security token on Ethereum. And there are other security tokens out there that are backed by real world assets, like there's like precious metals like PAXG, there are commodity-backed security tokens, and then there are also real estate security tokens. And just understand that these security tokens are regulated by the SEC, so the issuers have to make disclosures in order to issue the security tokens, and then there are probably some requirements of the investors as well, like they're going to have to, excuse me, KYC, and maybe make disclosures of their own. Maybe in some cases, they have to be accredited investors. So if you notice, the big difference between utility tokens and security tokens are the regulations. Utility tokens exist outside of traditional finance. They claim that they are not securities, and security tokens say, definitely we're securities. We're going to, and we're more than happy to be regulated by the SEC before launching this token so that we are legally equipped, right? Now the SEC, by and large, and SEC is led by somebody named Gary Gensler, they by and large think that most of the security tokens most of the utility tokens are actually securities. So anytime that utility tokens are sold in an ICO, an initial coin offering, they see this as the sale of unregistered securities. And in the next video, we're going to talk about some looming regulation and what can happen around this if utility tokens are regulated. But I won't go deeper into that now. We'll save it for the next video. We talked about security and utility tokens, and it's hard to put this next one, stablecoins, into one of those categories. It's kind of a gray area. Actually, they may eventually be considered security tokens, but they deserve an honorable mention here because, as you can see from this diagram, the demand for stablecoins is really increasing. What a stablecoin is meant to do, it's meant to have a stable value across time. And this is juxtaposed or in contradistinction to other Web3 tokens that we're familiar with, most of them that have very volatile prices. Bitcoin, Ether, really any Web3 token you can find besides a stablecoin can have really wild price swings, right? 20% up and down per day is not unheard of. 80% down in a bull market is not unheard of for crypto. And so the purpose of stablecoins is to have something that is more stable across time. And this is a better medium of exchange, right? If you want to pay for goods and services, vendors aren't necessarily going to want to accept Ether because this poses a big volatility risk to their business. But if they're paid in stable coins, that is, again, it's a better medium of exchange to accept that as a cryptocurrency. So there are things like USDC, USDT for Tether, Binance USD, DAI, and other stablecoins. These are the main ones right here. There are several different kinds of stablecoins, like fiat collateralized, crypto collateralized, and now we have these things that are non-collateralized, and then they're algorithmic. So they maintain their value algorithmically, and they're not collateralized with other assets as a reserve. So yeah, you can look more into those. We will not get into detail into those stablecoin categories. Now, we talked about all the main categories, right? Utility tokens, security tokens, and stablecoins. Now I want to talk about, if I just left you here, it would be sad because you really wouldn't see all of the really interesting use cases that are emerging right now with utility tokens especially. So let's zoom in on utility tokens and talk about some use cases that have been used. The first I want to talk about is the first potential use case for utility token. Again, it depends what the protocol programs into that token, is governance. Something we talked about in the previous video, but now you have token voting where let's use the example of some Ethereum DeFi protocols created a token and then distributed it to the early adopters of that protocol. And those early adopters now had voting rights in how the protocol would be governed and how it would be improved going into the future. So these DeFi protocols essentially decentralized their protocol's governance to a wide user base. The next use case is something called cash flow. This is where if you hold the token, you have a claim to that token's revenue stream. That protocol's revenue stream. So a good example of this is Uniswap. Uniswap is a protocol that allows users to swap one token for another token. So I can go from Ether into USDC stablecoin. And when I do this, I pay a fee of 0.05%, I think, of the value that I transact there. Now, this 0.05% fee is given out to the uni holders, right? So they actually are earning money. These passive dividend payments, you could think of them as just for holding the token. This is very similar to a stock, right? Where, especially in the example of UNI token, because you have rights over the Uniswap protocol governance, and you have a right to the revenues in the form of dividend payments just by being a uni holder. This is very similar to holding a company stock. Discounts is another use case of utility tokens. This is especially popular on these crypto trading platforms like Binance and FTX and Celsius. On Celsius, if you hold the Cell token, you get better interest rates when you're lending and borrowing crypto. And then on FTX and Binance, if you're trading crypto, you get a discount on the trading fees if you're holding that token in your wallet. Now onto the gaming use case. There are many different use cases just within gaming, so we could spend so much time on it here. But just as an example, some of these games have in-game currencies. There's a really popular game, arguably the most popular crypto game right now, called Axie Infinity. They have these little animal avatars, and you can breed these avatars to create other Axies which have real-world value. So in order to breed the Axies, you have to pay something called SLP, which is like something love potion. But SLP token allows you to breed these NFTs. So this SLP token has value, and it has in-game utility. And another one is Decentraland. Decentraland is a metaverse. You can buy these NFT plots, which it's essentially buying real estate in this digital metaverse. And in order to create a land plot, you have to spend mana, M-A-N-A. Mana is the Decentraland token. You have to spend that in order to create these NFT plots. So this is an example of how in-game currencies have utility in those gaming ecosystems. Now, the last use case for utility token I want to talk about is something called a social or community token. The most obvious way that this is being used right now are with influencers and celebrities and bands. So these influencers can release a token like Travis token. It's backed by my reputation. It's backed by the content that I'm creating. And it gives patrons of me a direct way to patron me, to fund me, right? Because I'm a holder of the Travis token. And then as people buy the Travis token, then the price of it increases. But it unlocks other things as well, like you buy the token, and then just holding that token in your wallet gives you access maybe to exclusive content that I'm putting out, to online VIP communities where you can get to these like more private Discord servers, or it could give you access to in-person events as well. So really the sky's the limit. These creators can program in any sort of utility that they want into the social token, but I just wanted to highlight this social token use case, which is used to kind of create these communities around celebrities, influencers, or really any other organization that you could think of. So those are the main Web3 token categories: security and utility tokens. We had an honorable mention of stablecoins, and then I went further into the use cases for utility tokens. Now, in the next video, let's talk about tokenomics, or the token economics behind these Web3 tokens, talk about token launches and some potential downsides to the token launches. Thank you.